Hey everyone, testing one, two, three, testing. Can everyone hear me? Thumbs up. There's going to be about, I would say, about a 4 second delay between what I say and what you hear and what you respond. Can you give me a thumbs up if everything sounds good on your end? this is this session's gonna be more on us paying attention to TA, going back, reviewing the basics. It's going to be less on looking at charts in terms of what's next, right? We'll do that as well as we move forward. But the aim for this session is to walk our members through just the basic TA. Um, yeah, my my office is pretty cold. I have a heater, but it's still relatively cold. It's insulated and everything, but it's just cold. So yeah, it's so chilly. Okay, so I want to wait and see if there's a few more people that can jump on. Hey, yeah, there's Yim. Okay, so this session is just for you guys. I know there's some questions on how I do price targets. There's my way of doing it, and then there's basic ways that I want you guys to start focusing on. Even if you spend a week or two just learning the moving averages. Okay, just learn the moving averages, and we'll go through that today. Okay, all right. You guys doing okay? Can you hear me good? Pretty well. Is it loud? Okay. All right. So let's jump into the session here. All right, guys. So before I start, keep in mind none of this is financial advice. I'm not a financial advisor. Entertainment, educational purposes only. My name is Vincent Nguyen here on Tipline. Okay, so let's jump in. Um, I know there was one or two chart that you want to look at first. Let's get those knocked out before we jump into the actual TA. Okay, if that sounds good to you, Aim and Yim. I know you had a stock that you were looking at yesterday as well. We can also look at that in our live today. I like to swing back to APLM and Veri and BTAI if we have time. I know market opens up. I know the market opens in about 30 minutes here. Um, let's see. I know. Let me look here real quick. That's so weird. I hear voices. I think the mic is picking up some voices. How funny. Yeah, sorry about that. Um, okay, it's so weird. I got a new headset, earphones, if you will. These are so amazing. I'm gonna review them here on Tipline at some point. Um, okay, so what was the first chart, Aim, that you wanted to get in and look at? Let's see. Now we're gonna take this nice and slow today. It's not my aim to blow through a ton of charts. Um, I want to spend time talking to you guys today and answer any questions that you might have. Oh, yeah, AVTX. Okay, let's jump into AVTX really quick. Okay, AVTX. All right, what do we have? Oh, okay. I hope you're not caught in this, Aim, because this doesn't look pretty. Let's look at the 1 day chart really quick here. All right. Wow, where to begin? Where did you come in on AVTX? Did you get caught up here? up in the 14-cent range and then kind of just draw down. Okay, so I'm going to use this as a teaching moment here, if I will. On the day chart, anytime where you see price start to gap up like this, and there's selling volume as well, lots of red here, right? And then it just gaps down below the 8 moving average, 8 exponential moving average, which is this green line here. That's a really, really, really change in sentiment between the bulls to the bears. Okay. Especially when price closes below the 8 EMA. When price closes below the 8 EMA, that is your signal to start scaling out or get out completely on your trade. And look what happened here on the day chart. As soon as price closed below the 8 EMA, touched the 20 EMA, actually it did close below the 20 EMA on the 18th. That is your indication that if you had bought down here in the 12, 13 price range, taking profit would have been very ideal. Hang on a second, guys. I got a message coming in. Yeah, so this is your indication to scale out or get out completely, because look what happened afterwards. Price moved below the moving averages. And this is actually a good example to go through and to use this as a teaching moment, because I want you to focus on moving averages before you do anything else, because the moving averages is the fundamental for understanding price targets. Price targets, resistance, and support. Okay, those three things go hand in hand with moving averages. If you can lock down, master that your understanding with moving averages, I promise you, that's half of your battle for winning trades right there. So knowing this, knowing that that basically AVTX has had, let me look here. Hold on a second. Knowing that AVTX has had from this swing low of about 11 cents all the way up to 18.7, that's a 61% run already. Okay. And then it sold off half of its candle here. That's a big indication. And the run lasted 7 days. It seems like a lot of these runs run about 7 days. It's a cycle of swing trades, if you will. Okay. So then what happened? It basically never broke the high of the 11th, which was 18 cents. And that's an indication that my mouse is dead. Hold on a second, guys. Why am I stuck? I'm stuck because I don't know why I'm stuck. Hold on a second. Why am I stuck? Nothing's working. Hold on a second. That's weird. Hold on a second, guys. Sorry. Can you guys still see me or hear me? I'm dead in the water here. Uh, there we go. Okay. All right. I'm back. Hold on a second. That's weird. Okay. Okay. So what was I saying? Okay. So if you have a high of day that became basically the high of the week, and price within the next couple of days does not break it, that is a strong indication that it's starting to go downtrend. So if you go back a few more days, on actually a couple of weeks, on 9/26, this high was never broken, right? So that tells me also that this is starting to descend. And that's exactly what it did. So Once, so going back to the 8 exponential moving average here, in my trading experience, are you guys still there? Give me a thumbs up. Let me know you're still there. So in my trading experience, anytime price breaks below the 8 exponential moving average, bad things happen. And that's exactly what happened here on AVTX. Price essentially retraced back down from, let's say, a high of 17 cents down to a close of 47% on the 30th, which was yesterday. And it doesn't look like there's going to be any relief for the time being, because look at what's happening between the relationship between price respecting the 3 EMA, which is the yellow line, and it's respecting. So here's the 3 EMA, here's the 8 EMA. When you see the 3 and the 8 run parallel like this, that means that there are more downside to come, right? There's more downside to come. So focus on understanding the moving averages and how they are in relation to pricing. I'm going to move back over here and show you what happened on this side when price went down and where it reversed. Okay, this is very important for you to get this. As soon as, hang on a second, guys. Let's look at this. Okay, so as soon as, holy cow, this is ugly. Hold on. Okay, so you notice here, right? As soon as price broke down below the 8, came up a little bit, and it just literally gapped down. Look at how price respects the 3 EMA until this is the relationship. This is so important. I want you guys to understand this. You see how the 8 and the 3 respected each other until they don't anymore. And that is when you have the convergence of cross up. So the point of retracement is right here on 9/11/23, when price no longer respected the 3 EMA and the 8 EMA, gapped up above the 3, 8, and 20. This is why I tell you guys that pay attention to price, the 3 EMA, and the 8 EMA. If you understand that relationship, that is half of your battle for understanding when to enter a trade, when to get out of trade, or when to not enter at all and just sit and wait. Okay, so right now, unfortunately, you saw this spiral downwards between price, the 3 and the 8, and what's happening here. Price is respecting the 3 and the 8. So what does that tell me? Nothing good is going to happen until we see this convergence between the cross up of the 3 above the 8. Okay, until we see this happening. Okay, that needs to happen before we see some sort of relief in terms of reversal. Look how far the 20 is. The 20 is the white line here. 20 is up here. It's super far away. Price needs to, at some point, pull upward in order to attract the 20 so that it can cross above. Okay, so what I'm drawing here is essentially what happened here. So this is why I encourage you to spend your time focusing on understanding how price relates to the 3, the 8, the 20, the blue lines, the 50, and the 200. 200 is nowhere to be found. Holy cow. Hold on a second. What? Yeah. Oh my God. Look at this. Why would you want to be in on this trade? This you do not you don't want to be in on this trade. This is this is not one that you want to be in. So unfortunately, I don't have any good news for you on AVTX because it's basically in a death spiral right now. It doesn't look like there's going to be any immediate relief until we see price start to create this cup and handle formation, if you will, this cup handle, the bottom of this cup. Okay. Now let's look at just let's look at today. Is there any relief that we can see? A little bit on the 10-minute chart. There's a little bit of a run up. Hang on a second, guys. Oh, they're blowing stuff up outside. Okay, it's Halloween. We have a party later. So there's a little bit of a gap up here. Price went from, yeah, so there's a little bit of a 41% run. That's really nice. So if you're in this trade, I would definitely want to consider getting out if you can. The 1 second chart here that I use quite a bit tells me that there's a pattern, ABCD pattern, and that price could potentially retrace to price target 2 at 11 cents. And look where it butts up against the 200 moving average. Acts as support or resistance. And in this case, it's probably acting as resistance, unfortunately. So that is where we're at with AVTX. I hope that helps. That's not good news, but I hope that helps. Anything else, guys, in terms of charts? Hey, Nim, I know you want to look at something as well. Let me know. I'm going to bring up APLM real quick because this is a trade that I was looking at and I actually got in, took a very a small position in here. Want to see if we can get back up on APM. There's a APLM, sorry, APLM. There was some news around this in terms of an experimental drug that showed some sign of efficacy in brain tumor, a brain tumor patient one, and then it ran. I got gapped down quite a bit, so I think there's a lot of potential for this stock to make a comeback. My goal is to see if it can make it back up to the XA leg, which is right around where this this pattern, this very bullish pattern, terminated here for price target 1, which is at 366. The risk reward on this trade, since I got in at a really decent entry after waiting for this whole drawdown to come down, and watching how, you remember how I just mentioned that if you watch price respect the 3 EMA, and as soon as you see the character changes in terms of creating this round bottom, that tells me that the sentiment is changing for the stock, that good things are about to happen. And I believe that this first candle, I mean, look at this candle here on the 27th, which is last Friday. It had 94 million shares traded. That's a lot of shares being traded in one day. So that tells me that the sentiment is possibly changed for APLM. It's back in the limelight. And then yesterday, 5.51 million shares traded yesterday, closed in the green. So now, what do we need for APLM to happen? we need price to basically disrespect the 3, join force with the 8 right here, and essentially when the market opens today, it needs to either gap up and basically close. I want to say create another so yesterday was the inside bar. I wouldn't mind seeing another inside bar today, a double inside bar, in order to build itself um, up. Let's change this to green. We want this to be green. Okay. And then work itself back up to a, let's see here, 220, around the 220 price range up here. That's a 161% move. If you were to just capture that, that would be awesome. Now, what was my risk? The initial reward would be 161%. My risk for this trade would be, let's say, it retraced. I bought in at, let's say I bought in at 84 cents. I want to say this would probably, my risk would be about 8.6%, 7-cent drop. But my gain to the next level would be up here at 220. And then I obviously trade management needs to kick in place. So if within the next 2 days, if I don't see price moving above or breaking above the 8 EMA, I'm going to bail. Even so, look where the 8 EMA is. Even so, it's still $1.09. And so if I cut my loss early, that's still a 30% gain, 29% gain. That's not bad. My goal is between 20 to 30% gain. Swing for the part, I mean, swing for a home run would be 161%. So again, using your what you know about moving averages, you can create support resistance, your entries, your exit. As soon as I saw price close above the 3, that was my indication that hey, could be a good time to enter. Now that we've watched price draw down so much that the potential, that the opportunity now is here. Okay, combine that with a pattern. Oh my gosh! And now it's out of the oversold area in this area here. So I got confirmation that the trade is out of the oversold on one oscillator. Second oscillator is almost there. It's just ever so slightly delayed. So that I would expect to happen today. So once I have both confirmation out of the oversold, bam, I would expect price to start moving. And I would expect a quick reaction up to, I want to say, the XA leg at 221 right here. So this is my price target, 221. If it doesn't get there and I see weakness and I see the bear stepping in to drive it back down, I'm out. That's trade management 101. All right, so TPET, yeah, TPET, we talked about in length, but you know what? Let's look at it anyway. See what happened yesterday. Obviously, I could be wrong. Which, by the way, I was totally wrong with BTAI. I mean, I knew it was going to go up, but I didn't take the trade, which I should have. Armor, but I didn't chase it. We'll talk about that later. Okay, so with TPET, unfortunately, it's oversold. You don't want to chase this. Oversold on the oscillators. And where you want to be was down here, this setup. As soon as you, right here, you see the 3 and the 8. As soon as you see price close above the 3 and you see this curve down and bottom out, just like I explained here on AVTX, you want to get in when price starts to curve away from the 3 and up towards the 8. That's your buy-in. Okay, that's your opportunity. So going back to TPET, your buy-in opportunity would have been somewhere around here, which is like 35 cents for TPET. So you have to stock these stocks. You have to follow it. You have to understand the price movement. Remember, they go in cycles. They go in cycles. So you want to understand the legs, the swing high, swing low, and that's a whole different skill set that obviously you're gonna have to learn, and I'll show you how to do that at some point. Um, so had you gotten in right when you saw price move away and up from the 3 EMA, this is your entry right here. This would be your entry, and then your exit would have been somewhere in this range, right? And that's like 100%. You never want to squander and let 100% gain turn to 50% or 30% because you're greedy. I was greedy. We were greedy on SECO play recently, and we let that gain squandered off and turn to less of a gain. So that being said, again, this is a good example to go over moving averages. Anytime price moves above or away from the 20, I start freaking out a little bit. I start looking at it and go, if I enter this now, how much am I going to lose if it retraces back to the 20? 27%. That's a whole lot of gain that I would lose. Okay. So my thinking is retracement on TPET at a minimum would be 45 cents at some point. And that is where you will see the oscillators retrace at least a half here. Okay. TPET. So let's look at the 10-minute chart. I love the 10-minute chart. It tells me a lot about what is about to happen. Let's see, is that 10-minute chart? Yeah, that's 10-minute chart. Okay, 10-minute chart. Well, like 4 to 5, ABC. Yeah, doesn't really tell me a whole lot. So, in my understanding, the 200 period moving average on the 10-minute chart is kind of like the 8 or the 3 on the 1 hour chart. So, my thinking is this breakout's going to fail, I think, and then it's going to drop. Okay. It's going to drop. And this is why it's going to drop and how you can measure the drop. So, you take the height and from the top to the bottom of this falling wedge and you measure it down. And this is where the price will be from, actually, you know what? Sorry, this is it right here from the neckline. So this is how you measure the drop or the run up. So we're looking at like around 41 cents when this falling wedge fails, which is interestingly enough, what did I say? Let's see. Hold on a second. What did I say? It's going to be. Yeah. Oh my gosh. See where this lined up? Wait, nope, 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 nope. Wrong chart, wrong chart, wrong chart. Was this it? No, that's still not it. What chart? Where's my hour chart? My day chart. Okay, this is, you know what? I'm turned around. Hold on a second. 1 day chart. Oh, nope, 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 nope. Hold on. Sorry, my hands are so cold. I'm like typing stuff that is not there. So this is the 1 day chart. Okay, 1 day chart. We were looking at the 1 day chart, right? The retracement. Yeah. So look, what did I say about retracement down to the 20 SMA? That's right around 45 cents. Now, if you were to go to the 10-minute chart, I said If this falling wedge fails the breakout, it's going to come back down to 41 cents. So what does that tell you? That tells you that there are confluences between two different time frames that retracement could happen to. And that is going to give you your range between 45 to 41 cent. That's how I determine price targets and price ranges. So I just walked you through how to TA where the retracement could be by using a 10-minute chart and a 1-day chart. That's how you do it. Spend time with the moving averages. Spend time looking at falling wedges, triangles. Understand how to draw them. Understand Elliott waves. Understand market structure. Okay? And then we can talk some more. Yeah, BTAI. I feel like an idiot. I recorded like a 40-minute amazing TA, and then I got to call in and something happened to the mic, and then basically there were no audio. It was such an amazing TA. I'm so embarrassed to say that I went back and tried to do the TA again, and it just wasn't the same, so I scrapped the video. Um, I'm just a one I'm just a one take guy. I don't rehearse my TA. I don't rehearse my videos. Um, I go in and I do a one take. I mean, usually your first take is your best take, right? It's kind of like taking the test. Your first answer is usually the right answer. Let's see. Oh, I see. You always measure your. Why wouldn't you? Yeah, that's that's trading 101. Why would you not look at your risk reward first? You always you always do your risk reward. It's like this. If you're going out on a date, okay? If you're going out on a date, you make a list. I like this person because the individual is great, blah blah blah. These are the pros. I think I'm gonna have a great time with this person because of XYZ. Here's a list of things that I may dislike about this person. You assess in your mind and go, do I want to spend 15 minutes with this person on a coffee date? Do I want to spend 2 hours on a dinner? Do I want to commit an hour and a half on dinner and then 2 hours on a movie? Trading is the same way. Are you in the scout for 10 seconds and make $1,000 and get out? Are you buying coffee? Are you in it for a day, day and a half swing trade? Are you buying long? Based on your risk reward. And your risk reward is based on the time frame that you're using. If you're scalping, you want to look at, I go down to 1 second. So you want to look at your 2 minute chart. I don't use the 1 minute chart. It whiplash you in and out too quickly. Markets open in 2 minutes, FYI. I use a 2 minute chart and a 10-minute chart and a 1 hour, 1 hour, 4 hour, and 1 day for swing trades. So you have to determine your risk reward. How much are you willing to lose on a trade? Are you willing, if you're buying 1,000 share, and if you're willing to lose 10 cents a share, that's $100 you're willing to lose, not a penny more. If your gain is more than 10%, let's say your risk is 10% on that trade and your gain is 300%, that's 3x. You have the potential to make $300 and the risk of losing $100. You always, 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 always measure your risk reward before you enter a trade. That's why I took APLM over BTAI. Even though I knew BTAI would have a bigger a bigger gain, but APLM had a lower risk to reward ratio. Here's my APLM risk to reward. My risk would have been 8.6%. My gain is 161%. Understand your risk, understand your reward. Okay? Your buy-in is when when the stock you're trading is quiet. That's when you want to buy in before all this happens. Okay? You don't want to buy in up here. You're going to end up being a bag holder. Everyone that bought in up here, I guarantee you, they're bag holding down here. And the last thing I want to leave you guys with is this. I've been called wrong. I've been called whatever, right? Um, I woke up and I messaged the team this morning, and I wanted. This was very profound for me this morning when this hit me. You, when you're wrong, you want to be wrong on the right side of the trade. What does that mean? When you're wrong, you want to be on the right side of the trade. What that means is if you're long, you want to be wrong by getting out sooner than you think in terms of the top of the price. Because if you hold on too long and be too greedy, price reverses on you, then you're out of money. I think I made that. You know what? It sounded so much better in my head. So basically, you don't want to be right about a stock dropping. You know what? Scratch that. Let me rethink that. Let me go back and look at my notes. It sounded way better in my head this morning. That's because I'm a little torn right now. I'm looking at the stock market open. Um, I want to get into the trading today. Good luck, everyone. We'll talk soon. Okay, I'm out.